Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we have another Ask Me Anything session with FuturesTrader71. The sessions are 30 minutes long. There's no prepared presentation. We just start taking questions from members and try to get all those questions answered. I'll post the recording of this once we're done. You can find the recording in the AMA thread. If you don't know how to find that, you go to bigmiketrading.com. On the top right in the search bar, type in AMA space FT71, and post number 2 has links to all the AMA videos. All right, guys, go ahead and start typing your questions, and I'll be turning things over to FT in just 1 second. I also want to remind everybody that in June, it's our 4-year anniversary, so we have 15 very special events, and because of that, we're not going to have any AMAs in June. So FT will be on for a webinar, but he will not be on for any AMAs until July. All right, and with that, let me turn things over to FT right now. FT, are you there?
Good morning, everyone.
Hey.
I'm getting the rest of June off, huh?
Yeah, we see you back in 2 weeks for your webinar, and then not again until early July.
Yeah, I was aware of that. Cool. All right, let me just start real quick with our disclaimer. I have to read it out. Trading futures options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The information provided is for education purposes only, which means you need to verify the information before you trade on it. Okay? Let's see what questions we have.
All right, guys, so go ahead and start typing those questions. Here's one from Joseph. Joseph wants to know, in your experience on analyzing the 6E, do you have any recommendations for which ECN Forex broker to trade with?
Well, I'm not sure what is meant by an ECN Forex broker. If you mean a spot FX broker, the brokerage that I'm a part of is not certified or not licensed for Forex, but the brokerage that I was with is who I've been referring the Forex business to. They're called Vankar Trading. They share the same office space as I do. VankarTrading.com, V-A-N-K-A-R trading.com. You'll be in touch with someone named Mark, and he'll take good care of you. That's really all I can offer. But remember, when you trade on the spot market, it is not a I don't want to say regulated market, but it's not a common exchange. So you can get different spreads from different vendors, and you can get different prices from different vendors and so on. Whereas when you trade the currency on the CME, for example, it is a standardized, highly regulated product with a pretty tight spread. You just pay commissions instead of paying the spread, which sometimes can be as much as $30 or something or more. You're just paying a commission for a market that's fairly tight. So being a futures trader and trading the M6E and 6E in the futures market, I'm much more comfortable with that than going with a bank or a vendor that may be trading against me or maybe providing a variable spread that I can't see. So, but if you still want to do spot, I would suggest Vankar, simply because I know who they are.
Okay. It looks like everybody's still in vacation mode this Tuesday morning.
I know. I noticed that on the Twitter feed, and even in my chat room, it's like super quiet today.
Yeah. So normally we have like 10 questions by this point, but actually there's not any other questions. So guys, type those questions right now. Otherwise, we're going to have to just fill this with some random thoughts. So FT, tell us, throw us some charts. Tell us what you see for today.
All right, let's throw up a chart here. So it's what's interesting about today is let's start out with looking at the big picture. So what we've had is this, thunderous rally that a lot of people have tried to fade, and it just keeps pushing and pushing. And last week we had, on the 22nd, we had this really interesting correction or pullback, which for many reasons a lot of people were discussing that this looks like a legitimate top, which I won't buy that argument. There's nothing here that says, hey, this is done on the upside yet. And then it spent 2 days basically a gap down on Thursday, and then pushed into Wednesday's trading, and then came back on Friday and just traded an inside day, and here we are gapping up. The expectation this morning was for us to push higher at the open. If you follow my Twitter feed, you will have seen that I was expecting a push higher in the open, and then a push to 68 was the first target. I got within a tick of it, and then I expected what's called responsive selling, which is selling towards the most recent value, which is way down here. And I expected a test of this open gap at 55.50. 56 is important. 56 is the highest volume price in this range, also known as a microcomposite volume point of control right here. I expected a test of 56 today, but it didn't really go that far. It did not poke into the gap too much. It just basically broke the low by like 3 ticks and then pushed up, and then we had the number, the consumer confidence number, which blew the doors off of any consensus that we had. So we had this strong push up to 72.75. But still, I'm seeing cracks in this. I'm still seeing reasons to try for the 56 area today. But the market seems to be very sluggish. Our volume, I have a chart that basically tracks volume, and I can change this to any periodicity. I can make it a 15-minute chart or whatever. This is the ES volume, which you see here in yellow. The yellow bar is for this half-hour period over the last 20 sessions. This is what the average, the median should have been. Like, for example, for the current bar is forming, so you can't take it for what it is. But you can see that our volumes have been less, for the most part, have been less than the last 20 sessions. And this includes the strong volume we had from Wednesday, Thursday of last week. So I feel like the market's really still in vacation mode or holiday mode, as witnessed by this, these long yellow bars exceeding the actual green or red bars, which is today's actual volume for that half-hour period. So the market's kind of not getting as much participation as it normally does. So you have to take that into account as a sign that the movement may be what I would call, I guess, what you can best describe as unorthodox. So even though I feel like, hey, we've gapped up, we've left this vacuum, we're now trading in this gap zone, and I do expect that it'll continue to push lower. I also know that my shorts are going to be guarded, tentative, light and tight, that sort of stuff, where I'm not going to be a sitting duck for very long. Again, I'm a short-term trader. I'm not a scalper, but I do scalp around positions, but I'm mainly looking for what's going to happen within the next hour or so in general. And if I can catch a good runner, I'll hold a runner until the market closes. I'm always flat at the end of the day. I have no interest in holding positions overnight, whereas Mike trades at a much higher time frame and tends to hold for swings, right, Mike?
Yeah, I have 2 different accounts really. So I have a day trade account, and then I have a account where I swing. So I do some of both. But I prefer, when I started trading, I guess 15 years ago, it was all swings. And
Oh, I see.
about 5 years ago, I started with the scalping, and after doing that for 5 years, I'm kind of worn out. So I really kind of prefer the swings a little bit, especially with my schedule with managing the forum. It just makes it a little bit easier. So everybody has their own method
Yeah, of
that
course.
fits them. Okay, we have a few more questions that have come up. A few people have woken up, it seems. Let's see. David wants to know if you have any thoughts on Steidelmeyer's latest work. He's talking about what he calls the volume strips. He's done a few presentations on CME about this. Have you seen anything?
Yeah, I actually, this is something that he's been working on for some time, and I watched his CME talk when he first started discussing it. It seems like Steidelmeyer, who was, in case you don't know who that is, he is the guy that basically created the market profile using those half-hour letter brackets and things like that. He basically took half-hour bars and assigned letters to every bracket, which is what they do on the floor. They assign a letter to every 15-minute period. If you have squawk, you'll hear this siren go off every 15 minutes, and that's basically the bracket switching over. But he turned it into a half-hour bracket, and then he, squished all the brackets to the left, and it became the market profile. And over the last, I think, year and a half, he has started to talk about volume profiling, which I started with market profile in 2004, 2005, and by 2006, it didn't make any sense to me to break the market up into time, because I have no interest in time. I'm more interested in price and volume. So I started to look at volume profiling and started discussing some things on another forum before Big Mike was around, and with a guy from Singapore, and just kind of started to chase it until I came up with what I have now. So he's kind of switching from that half-hour bracket idea to volume profiling, but he is applying this the same knowledge or the same technology he had from the market profile that he creates what are called dynamic profiles, which I kind of have. If I click this button here, I call them intra profiles. What he does is he looks for balance and imbalance. So if you have a fat profile and the market's kind of chopping around intraday, it starts to continue as long as you're within the same balance. It starts to continue to build the same profile, but as soon as the market makes a move and goes vertical, it starts a new profile. So he's able to divide, his software is able to divide or break up what is a balance and an imbalance and then chart them both, which is very useful information, actually, which is stuff that I'm going to cover in the education offering that I'm working on now. So I'm very familiar with what he's doing. He's doing it using CabFlow, which is a piece of software that costs like, I don't know, something like 15 grand or 25 grand or something. But I'm working with InvestorRT, which is the software package that I use to create something of my own that does a similar thing. It's very valid. What he's talking about is very valid. It's something that I know and observe in the volume profile, but he's breaking up a profile so that it's not just one intraday profile. It depends on the market conditions at the moment.
Right. Okay. Tony's asking, can you briefly explain what's needed to become a profitable trader? He's asking specifically about tools, psychology, capital, and what experience you need.
Watch all the videos, I guess. I love that subject. I love that subject because I back traders, and I ran a prop shop, and that's essentially what I did. I sat there and I pounded habits. I tell you what, the book that I suggested to Big Mike as an offering for this 4-year anniversary was not a trading book. It was a book called The Power of Habit, The Power of Habits. And Mike's going to be giving away a bunch of those as part of this anniversary thing. And the reason I did that is because in my experience, and I've backed quite a few people, my experience, the difference between a trader that achieves consistency, and I define consistency as someone who is able to predictably make money net by the end of the week, let's say. He may have a losing day here, or he or she may have a losing day here and there, but overall they're okay, you know, they're consistently making a living at trading rather than, you know, going to a job in the morning and then doing this as almost a hobby. The biggest predictor to me is how committed they are to following what they have to do. What I notice what most people do is they commit. Their commitment is to finding what works. So it's two different things. So you have a person going down this path of finding someone or something or some tool that helps them become profitable. Whereas, in my experience, the people who were consistent went down the path of working on themselves. So if you took a bar, if you took a chart, a pie chart, and said, this is how long that the area of the pie chart is how much effort it takes to become that profitable trader that everybody wants to be, I would say a good 80 to 85% of it is time that is dedicated to, you know, in my experience, it is dedicated to behavior modification, to getting a trader to see that there are habits they have to instill within themselves. There are some what are called keystone habits, or things that create a chain reaction that brings them to the level of seeing the market for what it is. What most traders do is they try the, you know, this and that indicator or this and that method, and then they see some success with it because it's a sudden change of habits, and they see a little bit of success with it, kind of like changing your diet. You lose a pound or two immediately, and you think this is the stuff, and then, you know, you stop losing weight. It's the same thing. And then so what happens is it stops working, they get frustrated with it, they have no confidence in it, and so what do? They go and look for the next thing. And then they have the same experience with the next thing. Oh, look at this guy, he's using trend lines, and he keeps hitting these trend lines. Everything works. Every indicator, every line on your chart works for a period of time, and then it stops working. And then it works for another, because the market goes through cycles that are favorable to a wide range of participants. It's just the nature of the market. So I can make something look like it works all the time by sharing setups, indicators, and so forth. But I don't share setups or indicators or anything because the market is a very dynamic thing. So it's much more important to me to understand what is your reaction to losing. What is your reaction to winning? Or even more, what is your reaction to making money? Are you worth it? Because the biggest thing that holds traders back, in my opinion, is errors, execution errors. If you don't keep a journal at all, okay, if you think journaling is like just a bunch of BS or whatever, I would say at a minimum, keep a notepad in front of you and just write down your trading errors, execution errors, things like chasing a price, not taking a price, passing on a setup that you legitimately saw and felt you should take, it's within your parameters, taking a trade and then scratching it but not allowing the market to actually determine whether or not it's a win or a loss, taking a 2-tick winner when your target's 3 points away in the ES, for example, or 12 ticks away and taking 2-tick winner, taking a tick loss when the market has not told you that it's changed its mind. Those are all execution errors. If you write those down and write down how much it costs you, like what it should have yielded versus what you got, you will find that it's astounding It's astounding how much those errors cost. And we have a trader in our group that does that for the Dow. He's an incredibly effective method of doing it. He just has this sheet. He uses a trade analyzer, which is a tool that proprietary tool that we have for our traders, and he downloads a spreadsheet of all of his trades, and he puts it in an Excel sheet, and he writes down next to it, okay, this trade cost me this much, there's an error here. And it turns out that almost a huge percent of his losses, I can't quote a number, but it was just enormous, were errors, were things that he said he would not do but did, or things he knows he shouldn't have done but did, or things he said he was going to do but did not. You'll find that a huge portion of what's frustrating about trading is your behavior. So I see your question as, you know, is it tools, psychology, capital? It's a tremendous, I would put a tremendous amount of weight on psychology, but the biggest thing that affects your psychology is capital. Is capital. Most people trade with too small an account to be able to effectively take the trade, allow it to work for them, and then the loss, and if the loss occurs, that loss becomes a small portion of their account as opposed to something that is huge and paralyzing. Like if you're trading a $2,000 account with $500 margins in the ES, a product that has a notional value right now of almost $90,000 per contract, it's to me it's suicidal. This is why I'm the risk manager for my brokerage, and I don't allow $500 margins unless you have a proven record and can handle the leverage. Otherwise, I wouldn't want to give you something that is going to harm you. And so trading a two lot on a $2,000 account, yeah, you're only using half the leverage on a $500 margin, but that's a tremendous, you know, you take a 2-point or a 1-point stop on a two lot and a $2,000 account, that's just a huge portion of your account as a percentage, you know, as a percentage of your account being risked on one trade, and that's just not a smart way to manage money. As far as tools, you just need a very stable platform. I got rid of a trading platform that used to cost me almost $1,600 a month. I used to use XTrader, then I moved to CTS. When I got to stage 5, I used stage 5 Trader. It's stable. It's all I need. It's got the tools that I need. My charting package is extremely important. It has to have really good data, so I use DTN IQ feed for that, and I'm running Investor RT. But any charting package that you feel confident in should do the job, you know. So tools are not the big issue, although a lot of people focus on that. I get emails saying, hey, should I get a Core i7 Intel with like 16 gigs of RAM and a 2 terabyte hard drive and, you know, 16 months? No, you don't need that. You need a therapist more than you need that. Really, the tools are great. You have to be able to rely on your tools, but the issue is mainly going to be how are you as a human being when it comes to sticking to a commitment. How routine-oriented are you? I always wanted to back athletes. How are you with failure? Are you someone that is derogatory in your speech with yourself and your thoughts? Or are you someone who pushes yourself but are also positive and hopeful about it? If you're someone who thinks the market is always against you, then you're going to have a hard time. Anyway, I think I rambled on that one, but there's just a lot of factors that go into this, the same factors that it takes to be a professional athlete. What does it take to be a professional athlete other than the ability to play the game? There's a whole lot more, because there are a lot of kids out there that can shoot a basketball and can dunk and so forth, but they're not in the NBA. There's stuff that needs to happen for you to reach that caliber, and that's what you're trading against. You're trading against people who are just, I do not mess with risk. Whenever I've messed with risk, it's cost me thousands of dollars per trade, I just will not do it. And there are people who are very sharp and are willing to take your money when you have a lapse in judgment, or you hold on to a trade when you shouldn't have, things like that. That's what gets people, in my opinion.
Okay. Let's see, several questions now. Joseph wants to know if you can describe your experience on absorption with homework levels.
Absorption, okay. Absorption. That's a difficult one to answer, because you have to be more dynamic with that answer. Sorry, hang on. You have to be more dynamic with the answer. So I'm looking for things like absorption. I'm looking for things, let's say I have a level, let's say down here, the 61 to 60 is an area that I'm watching, because you can see on the composite profile here, it's very thin. This is likely an area that'll either have a quick push through, because the bids will pull expecting better prices, cheaper prices to buy, or the sellers will be more aggressive because this is a price that was rejected, and it separates the next acceptance area, which is the 56 I outlined earlier, and this acceptance area, which is the 65, which is what we're fighting in now. So for me, when it comes down here, if I see that the bid is refreshing, it's getting hit. Not 1 lots, not 2 lots, not 5 lots or 10 lots. If it's getting hit and I see the accumulative size being traded at that price is substantial, yet the bid does not go away, that's absorption to me. That, to me, on a decent rotation down, let's say from 64.5 where we are now, so it's 64.5, and we rotate down to 60, that's a 4.5 point rotation. And if a 4.5 point rotation is confronted with refreshing bids, as the market's selling off, it's just there's somebody just buying and buying and buying and buying. My job now, my interest in that level, is to stand back and see if there's anybody interested. If not, then I want to buy them cheaper, just like everybody else. But if somebody keeps buying and buying and buying and buying, I'll take the trade. I'll get long with that buyer. But my job here is to lay off risk first. So I'm looking to buy, and I'm looking on that rotation to have a 1.5, 2 point pullback, so I can take some risk off the trade. And by taking some risk off the trade, securing some of those profits, what happens is my theoretical average, the overall average on the position remaining, becomes much more favorable. Let's say if I get long around 60 and take half off at 61.5 because somebody's buying it, and then all these late shorts are going to get squeezed on a big rotation. It goes to 61.5, and I'm holding half the position. I have improved my average from 60 to what? To 58.5. So now I have some profit that has moved my average to 58.5, and now I'm watching for a retest what it's going to do, and if it looks like it's going to fall through, I'll close at 59.5, 59.75, wherever I can get out, and I still have a little bit of profit left, but I still gave that level a shot. That's how I trade, and then I'll wait for the next layup, and we'll take it again, which in this case would be down at 50 in the 56 area after it breaks through. So absorption to me is an acquired skill. It's not something that I can program, or you need to see what is the velocity of the trades on one side and how is that side refreshing, and you need to see the size or aggressiveness of, it's nice that they're trading 1 lots in quick succession, but that doesn't really do anything for me. But if they're trading 30, 40 lots and it's accumulating 15, 1,800 contracts, yet the bid is not moving, that means a lot to me. At least for a quick pop that allows me to get rid of my risk partially, so that I can hold on and ride the trade back. And most of the time people think I fade all the time, but the fact is, in trading, you're always fading. You're fading some trend somewhere, So I'm always trading in the direction of where we're coming from, and I'm always trading towards value, which means that I'll buy this back towards 65.50 if it comes down to my level. If it breaks through, then I'm going to take the pullback to get short to the next level. So I'm always fading the counter rotation to get in. I don't trade breakouts.
Okay. Let's see if we can answer just a couple more questions here.
Sure.
Jeff wants to know if you can show us an example of balance and imbalance.
Okay. So the easiest way to show that is on the composite. We'll do it on a daily basis. The composite here is formed from daily bars that are U.S. stock market hours only, or U.S. RTH, regular trading hours only. That means 8:30 to 3:15 Central, or 9:30 to 4:15 Eastern. Balance is this. So when we broke out of this range, as the market broke out of this balance, see how tight that is? That is balance. It broke out. Now we're out of balance and we're in imbalance. What I would expect in an imbalance is what's called one-time framing. So higher lows, higher lows, higher lows, higher lows, higher lows. As soon as bars overlap, I draw this MC here. I draw this and I start to look at, hang on, let me get rid of this and redraw it. So as the market moves up, it's in a trend, it's an imbalance. But as soon as it rotates upon itself, I start to look for balance. And so I draw an MC and I start to look for fatness, just a non-technical term. I start to look for fatness in there. And then I start, as the fatness is created, as this big curve is created, now I'm trading in the mood of balance. Until it gaps up again or moves away, I'm in balance. So now we created an imbalance at a higher high, but then the next day it falls back through, and now I'm in, for this day, I'm trading in balance. And I continue to do that throughout until it gaps up and it creates a new structure, at which point I would create a new MC, a new composite. And so that new composite will look like, so I won't draw it when it's trending, but as soon as it rolls over on itself, the market's balanced. And all balance means is that both sides are active. And imbalance is just the market's way of saying, these prices are too cheap. Let's reach higher to advertise for higher prices to motivate the sellers. That's what the market's trying to do. As it reaches higher, it is looking for sellers. It's not trying to find buyers. It's already got buyers. It's saying, look, is this price not cheap enough, not high enough for you to be activated? Because it's trying, the market's purpose is to create balance, is to create as many buyers and sellers in a price range as possible. That's what the market's there for. It's no good to have a market that is running and running and running and running and not able to find the other side, because you know what? It can go from 1520 to 1560 on a one-lot trade in an imbalanced market. All you need is for all the offers to pull. No sellers. That's not a market. That's just volatility. So balance and imbalance is an important factor, and everybody needs to have a plan for balance and a plan for imbalance. What do you do in a trending day? What do you do in a day that's balanced? And then you can use several tools that I cover a lot in those webinars on my site to help you determine early on what the condition will be. Is it going to be balance or imbalance? Today, we have imbalance compared to Friday. We're way out of that range. So we have imbalance. However, we are still in balance with what's happened over the last week or since the 14th. We are still in balance. So what I'd like to do today, or what I tweeted before the market, is let it run up to 68, and I'm looking for it to fall right back to 56. Why 56? It is the most traded price over the last couple of weeks, or since the 14th. That's what I'm aiming for, and that's what I brought up earlier, that I'm still looking for that 56 down there. So that's a simple, that's a very short synopsis of balance and imbalance right there.
Okay. Let's see. Anthony wants to know how. Rob wants to know, how do you know if you followed your plan at the end of the day if you're a discretionary trader?
So Okay, so a discretionary trader is not a random trader, because there's always this perception. It's kind of like the perception that trading is gambling. It isn't gambling, because gambling has much, much lower odds, although many traders do gamble. How do I know I followed my plan? My entries are discretionary, but my execution is not. And my plan says, in the context of what is happening now, I'm looking to get long certain areas. When it comes to those areas, how did I do? And that's what I'm grading myself on. I give myself an A to F grade. I don't do it anymore, but when I struggle, I go back to doing that. A to F grade as far as what my execution is, and my execution is firm. It's a firm structure. In other words, how I get in and what I do after I get in, how I scale, how I move my stop is firm. So that's the measuring stick that I'm using to find out if I followed my plan. If I don't take a trade in an area in the context that I had predefined in my homework, then I'm not following my plan. If after I take a trade, I move my stop or expand my stop or take a scale that that is not part of my trading structure, then I have not followed my plan. I'm not a mechanical trader. I don't think I could ever be. I don't think most people can because you'd have to be able to live with an extended drawdown as a mechanical trader, because not all systems get favorable market conditions. As a context trader, which is what I am, I'm able to modify based on what the market's saying or how the auction's going. I'm able to modify what I expect, and I just do it by answering very, very specific questions. What has it done? What has the market done? How good of a job is it doing? What is it trying to do? And then those three questions bring me to the actionable question, which is, what is it most likely to do from here? When I look at this, it has pulled to 61.75. It has tried to push back into the initial balance, which is this yellow line, which was formed in the first hour of trading. It failed. It pushed back again and it failed. So what is it most likely to do? In this context, what is most likely to happen? With a weak low, most likely this low is going to be taken out. So I'm looking for, if I have a level up here to trade against, which I don't, I would be looking for, the only question I have is how do I get in? And then I would look for areas to get in just using various techniques. I think somebody asked about the footprint. When I use the footprint's one technique you can use, or one indication you can use to decide how strong the buying or selling is. But I don't like it. I don't use it because it's too distracting and it's too far in the past. I can see the information in the footprint right on the dome when I'm about to enter. Just from experience, I can see who's dominating this particular period. So I don't need the footprint. But for many people who want to see the auction in detail, I would suggest you have a look at a footprint.
Okay. All right, guys. We're a couple minutes
past.
past.
Those are 2 questions in one right there.
Yeah. And we're a couple minutes over, so we're going to go ahead and stop right now. If you did not get your questions answered, there's a thread on BMT that you can post those questions, and FT can try to answer them later. If you don't know how to find the thread, just go to bigmytrading.com and do a search for AMA space FT71, and that is where I will post the recording of this session sometime later today. Thanks, FT. Hope you had a good Memorial Day weekend, and I look forward to seeing you back in 2 weeks for your webinar.
Thanks so much, Mike. Take care, guys.
Thanks. Bye.